Hello everyone, welcome to today's video. Today we are going to discuss one of the stock from Consumer Durables which is currently available at very attractive valuation. vguard is a well trusted name across India, and they have established in 1977, and at the beginning they started with selling stabilizers, and today they have very well diversified portfolio and constantly introducing new products. Their products are broadly categorized as three segments. One is electrical, the next one is electronics, and the third one is consumer durables. Under electronics they have UPS and batteries and stabilizers, etc. And under electricals the products like cables and switchgears. And in consumer durables they have water heaters, fans, air coolers, kitchen appliances, etc. If you see the revenue mix, the maximum of the revenue comes from the electrical products, and the best part is the margin from this segment is also the highest. The electronics and consumer durable sections contribute to 28% and 27% respectively. There are a couple of things that made me to think about this stock. First thing, they have a brand value which is known across India, and second thing, they have a business expansion opportunities. See, currently they are not into lightings, and they are not making any ACs, refrigerators, etc. So in future they can grow their business in this vertical as well. And most importantly, the stock has fallen almost roughly 50 to 60% from its peak, and currently the stock is fairly valued and trading at its strong support zone. If you see, the stock is trading in a range from almost 3 years, from 2018 to till date. There are many reasons for this economy slowdown and this pandemic, both 2020 and 2020. In these 2 years, there are a lot of supply chain disruptions, so they couldn't reach their expectations in terms of revenues, and also their margin got impacted due to the commodity inflations. See, there are nothing wrong with their fundamentals. Fundamentally, they are strong, and we are going to look some of the numbers. Stock is currently trading at a P value of 40 against the industry P of 63, so there is no problem there. See, the operating profit margin is slightly less as compared to other players in these sectors, but they are slowly increasing their OPM. As the commodity prices eases, we can see the improvement in the margin. The revenue growth is not very exciting for the last couple of years. The reasons for that, I already stated that, and the same thing is reflected in their stock price. The stock price has not moved anywhere from last 2 to 3 years. The company is almost debt free, so there will not be any much of interest burden on the company. See, good thing is company is generating free cash flow. So after deducting their capital expenditures, companies still retain some of the cash with them, so they can utilize that to repay the borrowings or to paying the dividends, etc. So company need not to go for a fresh borrowings in order to pay the dividends or any other expenditures. If you see the ROE, company efficiently uses the shareholders' money in order to generate the profit. The ROC is also very consistent, so the company is efficiently utilizing their capital employed in the business to generate the profit. This is an indication to an investor that company can reinvest a big chunk of their profit back into the business, because from the ROC we can tell that company is efficiently utilizing the capital to generate profits. They have a decent cash conversion cycle, though there are scope for improvements. It's nothing but the number of days or time taken by a company to convert their investment in their raw materials or inventories into cash. This tells us about the financial health and liquidity of a company. This is very simple. I will explain you with an example. There is a company, they purchase the raw material from a supplier today. Okay, it's not necessary that company has to pay the supplier on today itself. So company will pay the supplier on the 10th day. Okay. On the 10th day, company has paid the supplier for the raw material. On the 15th day, company has converted that raw material into finished goods and sold to the customers on the 15th day. Now, all customers will not pay the amount on the same day. So, the customer will pay the company on 20th day for their goods. See, on the 10th day, company paid the amount to the supplier. That means on the 10th day, company actually invested on their raw materials or inventories. See, company made the final product on the 15th day from those raw materials. That means those raw materials was there with the company from 0 to 15 days as an inventory, and on the 15th day company sold that product to the customer. Did final customer make the payment for their product received on 15th day? No. Customer again took the 5 days and customer paid the amount on the 20th day. So company received the cash or payment on the 20th day. So company made the investment on day 10 and received the payment on day 20. So the cash conversion cycle for this company is 10 days. That actually means company takes 10 days to convert its investment in raw materials or inventory into cash. Hope you understand. I tried my best to keep it simple. The shorter the cash conversion cycle, it's better for the company, so that company's working capital will not be tied up for a long time. And often the lower the cash conversion cycle is the reflection of better management. You should always compare these numbers within the industry peers. So overall there is nothing off with the fundamentals. Let's go to the chart. I'm on a weekly chart now. See, as per the technical point of view, the chart looks really good as the stock is trading near its strong support zone. It's very unlikely that the stock will fall below 150. One could start accumulating the stocks at 190 level, and I sense the price may touch 160 to 150 level. One could consider buying 40% of the quantity now and remaining 30% at 160 to 165 level. And again you must keep 30% of the quantity for 150 level. The kind of investors or traders who are of the very short term view can avoid this stock. I hope you like the content and learned something new in today's video. If yes, please press the like button and subscribe to my channel. I will see you in the next video. Thank you.